Hey guys, Max here, and this is your daily market update for yesterday, the 9th of February. We will, of course, cover what happened with equities and in crypto as well, the evolving situation in Ukraine, along with just a few other things. So let's get right into it. Now, what exactly went on? Well, stocks were green for the most part, and treasury yields actually fell a little bit as fears of monetary tightening increasing actually subsided. Now, the S&P 500 was up 1.5% for the day, the Nasdaq saw a decent day as well, rising 2%, and the Dow Jones rose 0.8%. Across the rest of the world, though, equities didn't really move a whole lot at all, with the Stoxx 600 and the FTSE 100 only moving about 0.1%. Now, some tech companies saw decent performances. Disney, for example, released really strong earnings, so it rose a decent margin as well, and we'll talk about that today. We also have earnings for a few more companies to come out this week, Twitter and Uber being some of the big important ones. Now, currencies didn't really see any major changes, but bond yields, as I just said, did decline across the board, albeit only by a small margin. The US 10-year Treasury declined 2 basis points, and it now sits at a yield of 1.94%, which is still really high compared to the last 2 years. Now, oil prices stopped their rout and they rose 0.7% for the day to everyone's disappointment. WTI crude is now once again sitting above $90 a barrel, and gold saw a slight advance as well, rising 0.3% and now sitting above $1,830 an ounce. Now, in the crypto markets, we saw modest but broad rises across the board. Bitcoin is currently sitting at $44,600 and Ethereum is sitting at $3,200 at the time of me making this video, so the markets are quite happy. Most altcoins rose something like 2 or 3% in value yesterday, as confidence in the crypto markets after a week of good news is still pretty strong. Now, there has been a pretty big development regarding a Bitcoin hack from Bitfinex a few years ago, and we will cover that today later. So now onto the rest of the world, and we will start with Ukraine. Now, Russia and Belarus together have started their largest joint military drills for years as the West and NATO watches on. These drills have been the official reasons behind Russian forces building up on Ukraine's border in Belarus, and it was Macron's belief that Putin had agreed to withdraw Russian troops from Belarus after this exercise is completed, which would have been a huge de-escalation and a major win for Macron and France, if only it had been true. Of course, Putin played Macron a bit. He told him what he wanted to hear, waited for Macron to eagerly make the announcement that he had saved the world and stopped Europe from falling into war, only for Putin to come out and say that no, Macron is wrong, nothing is changing. To be perfectly honest, this would be a little bit funny if there weren't so many lives at stake. Now, either way, the exercises are due to run until February the 20th, and there's probably going to be a lot going on very close to Ukrainian borders, but also close to Poland and Lithuania's borders as well. The really interesting thing to come from this will be whether or not this leads to a permanent military presence of Russian troops in Belarus, which seems quite likely. Of course, Russia and Belarus are close allies. Their regimes support each other regularly, but up until now, Russian troops have mostly stayed in Russia and Belarusian troops have mostly stayed in Belarus. Other developments from the Ukraine situation are mostly coming from the West, with Boris Johnson readying another 1,000 troops and putting them on standby, and he's also meeting with NATO allies to talk about everything that's going on. There are peace talks going on between Russia and France and Germany, but they've stalled and it doesn't really look like they're going to be going anywhere substantial, unfortunately. Russia has made it clear that France can't speak for NATO in any real capacity, only the US can, and Germany doesn't want to oppose all this stuff in Ukraine in the first place. All they care about right now is keeping that natural gas flowing. Now, one other big development is related to the price of oil in the world right now, and the fact that Russia produces and exports quite a lot of oil. We spoke earlier about WTI crude oil sitting above $90 a barrel, and Brent crude is also very high, sitting at about $91.50 a barrel. This, very simply, is going to mean more money for the Russian state, and one estimate suggests that Russia might have an extra $65 billion this year alone, which is about what Russia spends on the military in an average year. On top of this, Russia has been working to reduce its dependency on the West. It will now settle all transactions with India in euros, not dollars, which are far less likely to be restricted from Russia. They've also made an agreement with China to sell fossil fuels, and that deal will also be settled in euros as well. And then to top it all off, Russia's central bank has been reducing their holdings of US dollars, building up gold reserves and other foreign currency reserves as well, and preparing for the country to maybe be cut off from SWIFT, the international banking system. Now, there has been a lot of talk of what Russia's aims actually are here, whether it is to expand their influence in Western Europe, maybe to set Ukraine up as a buffer state like Belarus is, or if their aim is as simple as what they claim it is, and it's to stop the expansion of NATO. Now, in my opinion, this is mostly smoke and mirrors. Of course, Russia would be happy if NATO stopped expanding, and they'd be happy if Ukraine became a part of CTSO, or even if it was split in half and eastern Ukraine became a little puppet state like Belarus, but this is not the primary goal of Russia's actions, in my opinion. Too many people see destabilization of the West as an externality from all of these actions, but I believe this is simply the aim. The actual target of the Russian state is to destabilize the West. High gas prices achieves this. Tensions between Germany and the rest of Europe about Nord Stream 2 achieves this, and fears of war in Eastern Europe achieves this. I think the people trying to negotiate, mediate, or just analyze what is going on need to consider this as a major possibility to put Russia's actions into context with this idea, and if they do that, maybe then Putin will stop running circles around everyone. Now, moving back into the crypto sphere, we have just seen the US government become one of the largest Bitcoin whales of all time, holding $3.6 billion worth of Bitcoin, which is more than Tesla and El Salvador as well. Why has this happened? Well, a few years ago, these two people stole 119,000 Bitcoin from Bitfinex, an exchange that is not exactly known as being safe or reliable or above board. Now, this pretty much amounts to one of the biggest heists of all time, and the two people who stole this Bitcoin have been caught, they've been arrested by the US government, and these people were so stupid that they kept the private keys to the wallets which held $3.6 billion worth of Bitcoin on their iCloud accounts. So the US government got warrants to search their devices, and they found the keys, and now they hold $3.6 billion of stolen Bitcoin. Of course, this should all be returned to the people who had it stolen from them, but you don't really believe that's going to happen, do you? Now, there are a lot of intricacies to this story, especially regarding those who lost out getting paid back, and Bitfinex built a bunch of other cryptocurrencies and gave them out for free to the people who lost their Bitcoin, but these crypto assets are not Bitcoin, and those people have not been adequately reimbursed, in my opinion. Even reimbursing them with US dollars or gold wouldn't be adequate. They had Bitcoin stolen from them, and that is all that will be sufficient to make it right. Now, there are some people claiming that Monero and XMR has been hacked by the FBI or the CIA or something, and that's how these Bitcoin thieves got caught, because they used Monero to launder some of the money, but the reality is it probably hasn't been cracked or hacked or anything. These thieves were just really stupid. They literally bought gift cards with their names and had them delivered to their home addresses with that stolen Bitcoin, and the vast majority of the stuff they bought was not laundered through Monero. Now, just to make matters even worse, the two hackers are TikTokers who do stupid dances online and are pretty much the epitome of annoying young influencers. This is a pretty crazy story, but it isn't over yet, and we can all bet with probably some strong accuracy what's going to happen next. These people will probably get convicted and get long jail sentences, Bitfinex will probably not get the Bitcoin back, and the US government will remain one of the world's biggest Bitcoin whales. Now, in earnings news, we saw Disney come out with really strong results, and the stock pumped pre-open up 6%. Now, in detail, Disney Plus, the streaming service, is doing really well, and it added 11.8 million new subscribers in the last 3 months, whereas they only expected 8 million. They now have just under 130 million subscribers, which is right about half of their long-term aim of 260 million by 2024, which is looking firmly in reach. Their revenue for the quarter was $21.8 billion, and their earnings per share was just over $1, about twice what was expected, and 3 times what it was last year. Now, the company's stock has not had an easy time of it over the last year. They've followed the trend of growth companies struggling to maintain their expensive valuations, and Disney was down by as much as 33% from its all-time high, and it's still down over 20%. They are still sacrificing current earnings at the moment by pumping loads of money into growing the business, into putting out loads of content online and increasing their subscriber base, which is why, despite the fact that earnings were literally twice what they were expected to be, the stock has only risen 6% pre-market. Most Disney investors don't seem to be too bothered about the company's earnings today. They are more concerned with its forward earnings and growth of its subscriber base and things like that. What this earnings report does reveal is that Netflix's struggles with maintaining their growth is not really an industry-wide problem, but more of a problem with Netflix on its own. I've said this before, but content is a very fickle game, and no one knows which show or film is going to be the next biggest hit. Netflix was king of streaming for a long time, but that era seems to be coming to an end, and it seems like most of the time there is a big new show that everyone's obsessed with. Well, it isn't necessarily on Netflix like it used to be. It's worth mentioning that this is not unique to Netflix though. Disney and Marvel, for example, have seen unexpected failures recently as well as huge successes. That Eternals Marvel film was a fairly big flop. I can't tell you if it's any good or anything like that, to be honest, because I just don't watch those type of films. I haven't seen it. But prior to it coming out, a lot of people were under the impression that any kind of superhero film in that franchise would be a huge success. But obviously, that isn't necessarily the case. Now, the Freedom Convoy, as it has become known from Canada, seems to be spreading overseas, as a similar sort of protest is expected to happen this next week in France. Protesters against the country's vaccine mandates are expected to use their vehicles to basically block roads in Paris and bring the country to a standstill. The police have banned this protest before it's even really started. They've claimed that it would disturb public order, which is usually what protests aim to do. This is France, of course. Protesting is a national pastime. They do it better than any other country in the world, so I fully expect this to go ahead and for it to make headlines as well. Now, for this story, for my opinion on it all, I think I'll simply say honk honk. That is mostly it for the day. We are expecting to hear from the Bank of England's governor today about inflation and interest rate hikes in the future, and we are finally getting the US CPI inflation data today as well, which is not expected to be good, and that could rattle markets. I will be back tomorrow, of course. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world-famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up. You don't have to buy anything. You don't have to hand over any card information. So if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.